Today, I'm going to show you exactly how to read stock charts, step by step. In fact, I've used the exact same steps from this video to grow my stock trading account from $1,000 to over $10,000. So if you want to trade USA stocks like a pro, make sure to watch the rest of this video. Hey traders, I'm Andrew Oko. Welcome to another video. If this is your first time here and you want to learn how to find the best performing stocks to trade every day, make sure to hit the subscribe button and the bell notification icon so you don't miss out on my future actionable stock trading videos. Okay, when I first started my stock trading business a few years ago, I was completely lost. I knew that stock trading was a legit way to make money on the internet, but I didn't know how to read stock charts. So I did what anyone would do in my situation. I searched for keywords like how to read candlestick charts and how to read stock charts for beginners. And I saw the exact same advice over and over again. You know the kind of advice I'm talking about? Look for trading opportunities when the stock price is trading above VWAP. Use the relative strength indicator to predict stock price trend. Needless to say, this generic advice didn't work. And after years of trial and error, I finally figured out what actually worked. And now that I've figured out how to read stock charts effectively, my stock trading profits have shot to the roof. And in this video, I'm going to show you exactly how to perform deep technical analysis of the stock ticker symbol SPI with the breakdown strategy. Keep watching. The breakdown strategy is a three-step process for analyzing the entire candlestick price chart data of any stock charts effectively. So let's kick things up with step number 1 of the breakdown strategy, which is to find the target support price level on a 4-hour candlestick price chart. Before we move any further, make sure you have your tradingview.com account set up and ready to go. The tradingview.com chart page makes it super easy to track candlestick price chart data effectively. Now select the stock ticker symbol SPI for proper technical analysis. With that out of the way, I know you might be wondering, what is the target support price level? The target support price level is the lowest price level of a 20% bounce or more that is directly behind a massive decline in price action on a 4-hour candlestick price chart. Note, a target support price level should have a bounce of 20% or more and should be directly behind a dumping price action. And one of the easiest ways to identify the target support price level is to scroll back the entire candlestick price chart data to the first candlesticks that represents the first trade actions on the exchange. Another reason why you should always scroll back the entire candlestick price chart data is to see how this stock has performed in terms of average daily traded volume and price volatility over the course of the time it's been trading on a NASDAQ exchange. So keep scrolling back the entire candlestick price chart data and backward till you can see the first candlesticks that represents the first trade action executed on the initial public offering day. As you can see, these are the first candlesticks that represents the first trade actions performed on the 4th of February 2016, which was the initial public offering date. On this SPI candlestick price chart data, the target support price level is $490.25 and it's under a 97.42% bounce, and it's directly behind this dumping candlestick price action. As you can see on the chart, immediately price action broke down the target support price level at $490.25. It dumped really hard and lots of uneducated traders lost money in the stock market. Okay, now that we've identified the target support price level on a 4-hour candlestick price chart data as $490.25. It's time to check if price action ever returned back up to the target support price level again after the market price dumped in value. So move the entire candlestick price chart data forward now and forward again to see if price action ever returned back up to the target support price level. As you can see on the entire candlestick price chart data, price action failed to return back up to the $490.25 target support price level. And that's where step number 2 of the breakdown strategy comes in handy, which is to apply the 100% dump by 50% bounce minimum measurement formula on the 4-hour candlestick price chart. The 100% dump by 50% bounce minimum measurement formula, it's only used to identify the bottom price level on a candlestick price chart data. Note, the 100% dump by 50% bounce minimum measurement formula, it's only applicable to manipulative market price action, where price action will break down the target support price level by 100% or more without ever returning back up to the target support price level ever again. This measurement is done on the candlestick price chart data in order to identify the bottom price level. The bottom price level is the lowest price level of a 50% bounce or more that failed to return back up to the appropriate target support price level. As you can see on this SPI candlestick price chart data, price action broke down the target support price level at $490.25 by 1,140% before forming a bottom price level at $39.10. Price action bounced by an approximately 485% from the bottom price level towards the target support price level, but failed to return back up to the target support price level. Now that we've identified the bottom price level on a candlestick price chart data as $39.10, it's time to check if price action broke down the bottom price level. And one of the easiest ways to do this is to enable the horizontal line tool with a red color on the exact bottom price level. Now check if price action broke down the bottom price level. So if price action breaks down the bottom price level by any percentage margin, an all-time low price level is formed by the candlesticks that dumped below the bottom price level. And that's where step number 3 of the breakdown strategy comes in handy, which is to find the all-time low price level on the candlestick price chart data. The all-time low price levels are the lowest price levels reached on the entire candlestick price chart data at any given time. Note, new all-time low price levels are continuously formed when price action breaks down the previous all-time low price levels by a higher margin. As you can see at $39.10, price action broke down the bottom price level and dumped by 668% before bouncing by 209% towards the bottom price level, but failed to return back up to the bottom price level. For example, let's say you traded the bounce with a $500 position. You would have made a 209% profit, which is a $1,045 profit. Isn't it nice to make a $1,045 in a week? Of course, it's nice for me. Right here, look right here again. As you can see, price action formed the first all-time low price level at $5.12, which is a 668% gap between the bottom price level and the first all-time low price level. As you may already know, the all-time low price level is the lowest price level on the entire candlestick price chart data at any given time. Moving the entire candlestick price chart data forward, you can see price action continued its downward trend. It suddenly broke down the first all-time low price level at $5.12 and massively dumped by 755% before bouncing up by 1,117% and completely returned back up to the first all-time low price level again, and it even broke out higher. Again, let's say you only traded the bouncing price action with a $500 position. How much money would you have made as profit? You would have made a whopping 1,117% profit, which is $5,585 worth of financial gain, $5,585 worth of financial gain. Moving the entire candlestick price chart data forward again, you can see a second all-time low price level has been formed at 60 cents. Since there's no more candlestick price chart data below 60 cents, the all-time low price level. If you are anyone like me, you'll think that price action will keep trending upward, but the reverse is the case on this SPY stock chart. As you can see, instead of price action going to the moon, it dumped really hard and gradually broke down the first all-time low price level again. Not too long, price action dumped again and touched the second all-time low price level again at 60 cents. It bounced by another 204% again and consolidated all through these candlestick price actions with few bounces. Now the second all-time low price level is at 60 cents. And as you can see, there is no more candlestick price chart data below the second all-time low price level. Hey, look, I know every experienced stock trader has trading rules. He adapts to make stock trading decisions. And my trading rule number one is watch the dumping price action and only trade the bouncing price action. That means I completely ignore executing stock trades on a red 4-hour candlesticks and only execute trades on a 4-hour green candlesticks. Okay, now let's look at the chart again. As you can see, the second all-time low price level was formed at 60 cents. And after a whole lot of range price consolidation on the 4-hour candlestick price chart, a positive news about the SPY stock just hit several news media platform and that caused the demand for the stock to spike massively within 2 days. As you can see on the 4-hour candlestick price chart data, the price of the SPY stock bounced from the second all-time low price level of 60 cents to $46 in just a few weeks later. And that's a whopping 7,374% bounce. Now let's say you only traded this massive bounce in price action with a $500 position as usually stated in this video. You would have made over 7,000% profit from this trade alone, and that's a $35,000 worth of absolute financial gain from this SPY stock trade alone. You would have turned your $500 into a $35,000 in just a few weeks. Isn't it nice? After that massive spike in price action, the SPY stock price has been experiencing few consolidation and few spikes till date. This trade shows that you can still make money in even a very manipulative stock market. For example, the SPY stock has dumped from its all-time high price level of $968.49 to an all-time low price level of 60 cents with some massive spikes in price action I just showed you on a candlestick price chart. Now you can see that most of the stocks we trade are programmed to continuously dump in price value, and that's the bad news. The good news is that they can experience some massive spikes in price action, and that's a huge opportunity for you to make money in the stock market. So what's the secret to making money in the stock market? The secret is watch the dumping price action and only trade the bouncing price action with a breakdown strategy. Now you've seen my how to read stock charts approach to detailed technical analysis of any stock charts. Did you learn something from this video? Leave a comment below this video right now. Also, if you want my advanced stock trading techniques that I only share with my subscribers, just click the subscribe button below this video right now, and also click the bell notification icon so you don't miss out on my future actionable stock trading videos. Thank you so much for watching. I'll see you next time.